Hello, my name's Andrew Bell. I'm the chairman of the Ray White Surfers Paradise Group, which of course is the group that looks after your wonderful property. And just like you, I'm an avid lover of all things real estate and the wonderful benefits and the financial security that is brought to so many Australians such as us as investors. And there's constantly a demand to keep our fingers on the pulse about what's happening in the real estate market, and I really like to consider myself an expert in that field. I started my real estate journey 50 years ago as a letting clerk, and then I became a property manager for many years before becoming a salesperson, and then ultimately went on to open my own 3 offices in Sydney before moving here to the Gold Coast 35 years ago. I feel so blessed to have had the trust and the faith of the largest pool of investors that own properties here on the Gold Coast and give us their properties to look after. And so the purpose of these quarterly market updates is to keep you abreast of all of the legislative changes, market developments, and any cautionary advice, and importantly, any opportunities that might exist in the marketplace. Over the past 30 years, we've been honoured to be Ray White Queensland's #1 office on performance, 23 occasions in a row, and second on 7. And so we hold a very honoured position of being at the forefront of the real estate market and a better feel for what's happening than anyone else here on the Gold Coast. I also hold a position as a board member for the Real Estate Institute of Australia. And through that, I get insights that others simply don't get. And I have the opportunity to be at the table with federal government representatives to try and influence policy around real estate. Interesting in today's market. So today, I wanted to start off first with an update from Amber Roberts, our Head of Property Management, and judging by all the awards on the walls here, regarded as the most knowledgeable here on the Gold Coast and in Queensland, and certainly the most competent in property management. So Amber, like all industries right throughout Australia, there is constant security checks and scrutiny over everything that's happening, most particularly in relation to rental properties in recent years. Now, we've seen that sort of scrutiny go through the Royal Commission into banking, and that produced a lot of changes. And more recently, we see the blowtorch is sort of on the supermarkets. And we know our industry has got some degree of scrutiny. And there's been some more recent changes. We had a couple of changes in the Landlord and Tenancy Act. So can I ask you a couple of questions, because there's been 4 or 5 changes in recent times. The first one is in relation to bonds. Can you tell us about that?
So there's been 2 changes in relation to bonds. First is the amount of money and bond that we're allowed to hold off for a tenant. So previously, under the previous legislation, any property that was above $700 a week, the landlord was allowed to stipulate an amount that they wanted to take in a bond. So moving forward, as of the 30th of September, we can only take a maximum of 4 weeks. So there was very few occasions where we had to take, or we were requested to take more than 4 weeks. Generally, they were very high-end properties that had, expensive furniture or specific items in there that the landlord just wanted to have extra security over. But generally, most of the time, across the board in that mid-range, it was always 4 weeks. So that's not a huge change. The second part to that is just around claims on the tenant's bonds. So we now have a tighter framework around the turnaround time in which we have to provide evidence to the tenant. So we've always had a policy in our office. We always communicate with our tenants around anything we're claiming out of the bond. We have a very strict process around that. So for us, it's not a huge change. It's just really the government putting some time constraints around agents in general.
Okay. Also in relation to bonds, if someone had taken out a lease before this legislative changes, they'd taken the lease out and more than 4 weeks have been collected, am I right in saying they have the ability to ask for a refund for the amount over 4 weeks?
Yeah, they can. If and when they decide to renew their lease, they can apply to have the amount above the 4 weeks refunded back to them. That's something the tenant has to initiate. There may be an instance where they don't. They're quite happy to just leave the bond as it is, and that's fine. There's no requirement for the agent to automatically refund that. That has to be something that the tenant asks for in writing, and it has to be upon a lease renewal.
So most of these changes really has no impact on the landlord as such. This is more stuff that's, kind of putting a bit more the spotlight on us.
Correct.
And therefore good policies, procedures, experienced, competent people are going to be necessary to manage that, but nothing for landlords to be concerned about. But the other change that's happened could make some people a little concerned, and that is in relation to break leases. Can you give us a little bit more insight there?
Sure. So previously, when a tenant wanted to break their lease, the legislation was we were allowed to apply the tenant to pay reasonable costs in reletting the property. So that would normally be what we would charge the owner to relet the premises if it was under a normal end of lease situation. So that would be 1 week's rent plus GST as a letting fee, the advertising, and then they would have to pay rent until we found another tenant, because obviously they were still in a lease term. Under the new legislation, they have now put sort of a sliding scale, for want of a better word, dependent on how much of the lease has expired. So we did send something out to the landlords on the 30th of September with that sliding scale in there, which a lot of our clients would have received. So, but again, when we looked at over a 12-month period, how many of our tenants actually broke their lease, it was around 1% of our rent roll over a 12-month period.
Wow.
Which is about 20
Negligible.
properties.
Yeah.
So look, whether this legislation will spark more opportunity for people to look at wanting to end their lease early, it really comes down to the person managing that process and making sure that they have a good relationship with the tenant. In all of the instances where someone has broken the lease, we are in contact with the tenant. We know in advance, we can prepare for it, and most cases we're renting the properties within a week or 10 days because the tenants work with us to get access and so on. So it really doesn't necessarily mean anything negative for our landlords. I think it just comes down to having somebody that knows how to manage that process.
So those 4 or 5 changes, some previous ones at the very beginning of this year, has it changed property management in any way? Has it really had any impact in a negative way?
Not for our landlords, I don't believe. We've always had very strict and timeframes around things, our policy and procedures around different circumstances and the core tasks that we carry out. A lot of our stuff was really around best practice. It's now just become legislation. So for us, it's not been a huge change. Yes, we've had to tweak some of our procedures and just make sure that we're adhering strictly to those timeframes, where it wasn't necessarily a legislatively requirement. But now, obviously it is, so we need to just be mindful that we're adhering to those. But no, I think, if anything, it's just meant that the agents have to tighten their belts and they have to make sure that they're doing things as per the legislation.
Well, I've got another question in relation to Airbnb. You said to me recently that we've had quite an influx of people contacting us to take over their properties that were previously let out on the Airbnb basis. What's happened there? Why so many people changing?
Well, from the conversations that we've had with a lot of these clients, it's really about the return on the investment. They're really not getting the amount of money in their pocket that they were expecting. And part of that is, there's been a tightening of the belts. People are under huge economic pressure, and they're not freely taking holidays like they used to. So the occupancy rate has dropped, which means that they're not receiving as much in income. The other side of that is the fees that are involved in holiday letting.
Yeah.
I was shocked to learn that owners were being charged anywhere from 15 to 30%. And then on top of that, they then have to pay their utilities and they have to pay things like electricity and Foxtel and cleaning. And, by the time they actually have a booking, they're making negligible amounts at the end of the day. And a lot of these owners, unfortunately, don't see that until a whole year has passed. They may in peak periods see a substantial amount of income, but the problem is in those downtimes, that's annualised over a 12-month period, their actual return was not so great. So a lot of them have opted for getting a permanent tenant in, whilst the monthly or weekly amount, may be not as much as what they would see in those peak periods. Over a 12-month period, they're actually seeing better returns.
Yeah.
Correct. And less wear and tear on the property with people coming and going. Now, Andrew, I have a question for you. I have a lot of clients coming to me asking questions specifically about the market. So I'd like to get your perspective on that. So what's happening in the market generally? Are we seeing more buyers coming into the market, and what are the changes?
Well, I think most people know the market has changed. It's changed dramatically in some areas and negligible in other areas. Markets like Victoria, particularly Melbourne, parts of Sydney, western areas, Tasmania, are areas that have not only seen the end to price growth, but they've actually seen some reversal of price movement. And so that's not what's happening here in the Gold Coast. What we've seen as change, and there's definitely change, is where we might have marketed property, say, a year ago, and we might have got 80, 90 people coming to the open homes and ended up with, say, 7 or 8, 9, 10 bidders at auction. What we're now seeing is maybe 30 or 40 or 50 coming to open homes and maybe ending up with 4 or 5 or so bidders. But the pricing has not changed dramatically. And so our sort of balance between supply and demand has not changed. Definitely slightly less volume of buyers, but the number of active buyers is still reasonably high. And on the other side, stock levels have not risen enormously, they have gone up, but she's a very, very balanced market at the moment. So we are still a standout market for Australia, and it's no wonder with the population growth we've got, we are having people coming in great numbers. We've just passed the 700,000, well in advance of when it was previously predicted. And they're now suggesting by the late 2030s, we're going to have the $1 million number. This is such a strong marketplace.
Now, we are seeing an upswing in new investors appointing us to manage their properties. Do you have an understanding of potentially why that might be?
Yeah, look, the last 4 years has almost been impossible for investors to get into the market. They were going to auctions, competing with owner-occupiers, and owner-occupiers are buying, they're buying the family home, they're buying the dream, and they'll always go that extra bid to win the battle at auction. Whereas investors wear a bit more of a conservative hat, think about yields, and they go, well, if I don't get this, I can get another one. And so every day, the investor was getting beaten. And in fact, most of them just withdrew from the market altogether. And so that's tempered now, and we're seeing the kind of buyers not prepared to go above market as they were over the last few years. They'll go to market, but not above market. So where investors will go to market, then they're back in the game. And so across the country, we're seeing a lift in borrowing by investors to buy investment properties up 30% on last year. So it's a good lead indicator. And understandably why, what else do you do with your money? Do you leave it in the bank? No, you get next to no return. Stock market, everyone's sort of saying it's at dizzy heights, and we see how quickly stock markets, you can change, you can have a 20% drop in no time at all. You can have a share price almost disappear because of a decision by a CEO. Highly volatile, and all of the other fast money schemes, I think people are wary of it. So it's been such a proven asset over centuries here in Australia that that's where the sensible money is going again.
Yeah, well, it's great for us. It's great to have some more investors coming into the market, particularly new ones.
Yes, it really does help these desperate people looking for places to rent.
Yeah, I mean, obviously we can do with some more stock and ease that housing crisis, hopefully.
Yeah, no question. And I'd certainly encourage any of our landlords who are looking for investments to have a look at the attachment we've got here. We've got a list of some of the properties that we'd certainly be recommending to any of our investors. These are where the strongest demand is, where we're seeing the better returns on investment in the marketplace.
But we've seen a higher percentage of our existing landlords looking to sell in the past few years.
And
have sold. Why? Can you tell us why that might be the case?
Yeah, look, it's pretty simple, and this is Australia-wide. What was happening for many owners, they were shocked, they were really quite surprised by how rapidly prices went up. And so some landlords just of their own volition were going, oh, my property's gone up in value, I think I'll cash out. I've been under a bit of financial pressure, blah, 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 and they sold their properties. But the biggest one was that agents would be selling a property maybe in the street that landlords have properties in, or in a rental building, and when the agent sold the particular property they had leftover buyers. And so the agent would then ring other owners in the street and say, hey, I've got people who've missed out on the one up the road. Would you consider selling? They will pay X dollars for your place. And those are going, what? Like, someone's just rung me up and, wow, yes.
Tempting.
I'll take it. And so we saw a lot of people, probably, I'll call it short-sighted, just heard the numbers, the dollars and cents, and went, oh, I'll take that. But they're a lot of the people coming back into the market now going, well, you know, we sold, but now we don't know what to do with our money. You know, we tried it, we get nothing in the bank and so on, so I want to re-enter the market. And as you know, so many have said to us, the worst thing I ever did was sold because I've missed all the price growth that's happened since I sold.
Yeah, correct.
So that trend is easing now. We did see about 15% of all rental properties in Australia exit through the last 4 years, but stock levels or investor numbers are just starting to go back on the rise.
Do you think that with the introduction of us having the Olympics in Brisbane in 2032, that will obviously help people hold their investments a little bit longer, just waiting for potentially see what happens with the market?
Oh, we always know that Olympics around the world, there's more than enough research to now say anywhere where there's an Olympic, there's a rise in property values. There's so much investment goes in around the holding of Olympics. There's such an international spotlight on it in the years leading up to it that it just puts a stimulus into the marketplace. So of course our Olympic Games are not confined to Brisbane. It's that southeast Queensland catch pool, a bit at the Sunshine Coast, and we've got all the facilities from the Commonwealth Games that'll be used down here. So yeah, you hear it in the language now. So many people say, well, it's not far away till the 2032 Games, you know, so it's right there. It's already a driving factor.
Yeah, well, it'll be exciting to see, that's for sure.
I've got one more question for you, Amber.
Sure.
We've had a big upswing in investors who've contacted us unsolicited, wanting us to take over their permanent rentals. We know the Airbnb, but the permanent rentals.
Yeah.
What's behind that?
Well, simply it's just frustration. So we've seen, as we've explained, there's been a lot of legislation change over the last 5 years, and we went through a pandemic, and we were hit particularly hard during that process. So we had somewhere between 25 and 35% of our good, long-serving property managers leave the industry. They were getting no support, they had no foundation to work from, so they got frustrated and left. Unfortunately, they then had to fill that void, and they're being filled now with, you know, young girls coming into the industry who have little to no experience, and unfortunately are going into offices that they don't get that sort of support. They don't get the ongoing training, they don't get the guidance, and they're really left to their own devices. So effectively, you know, they're people new into the industry managing millions of dollars worth of real estate and really not doing really a great job. And some of these legislation changes, if you don't have the guidance and you don't have the training, they are really hard to navigate. So I do feel sorry a little bit for those people coming into the industry, because property management is a great career to have, but if you don't have the support and the training and the foundation behind you, quickly you can get overwhelmed. So a lot of our clients that are coming to us are telling us a lot of stories around those things. So that's a big driving factor.
And I commend you, because you have held our team together through all of these challenging years, and we've come out stronger. We have so many wonderful people that have been with us for a long time who share your vision and your culture that you've developed in this business. And it's a real credit to you, and I thank you for that.
Well, thank you. Well, yeah, I mean, it is a team effort, but I do believe that we do have a really great bunch of girls and guys that work for us here, and they did weather through a lot of that hard changes in the legislation and the market, and COVID was really hard. It was hard on everybody, but we did offer them the support, and we worked tirelessly to make sure that they had that support.
All right, one final thing, we've got to let our friend go.
Yep.
One final thing. If you're an investor, you're looking to buy something, we know the Gold Coast is probably the best market in Australia presently. Where would you invest if you were buying a property on the Gold Coast? Investment property.
Look, I see a lot of, we obviously rent in a lot of suburbs across the Gold Coast, and I see a lot of what prices are being achieved. But I would have to say Southport. I believe that there's still some really great prices, units that are for sale that you can pick up for a good price that have a great return. it's becoming a very popular CBD space, and I think that it's got much more growth in it. Absolutely.
Okay, well, we don't want to keep you longer. Thanks for your time today. We certainly want to keep you as informed about whatever's happening in the marketplace. You've got a valuable investment. I'm sure you want to know that it's in good hands, it's in the right place, and you're getting the best return that you can. And I know from my 50 plus years in the industry, there's no better investment. If you actually ever look at the Australian Financial Review's review of Australia's top 300 wealthiest people, you always see the core of their wealth, real estate. Core of their wealth, real estate. Couldn't get a better recommendation there. Thanks for your time today. We'll be back with you in 3 months' time. Bye for now.